All right, well, joining us in the studio today, we got one of my good friends of the program, Anton from Xapo Bank, to go over some stories with us. Anton, how are you this morning? It's great to see you on this Tuesday.
Hank, I'm excited to be back and see I'm wearing my Bitcoin hat because today is going to be all about Bitcoin.
Oh, I love it. And you came prepared with props. Anton, you are a man after my own heart. All right, Anton, I'm going to read this story quick. We're going to bring you back, and I can't wait to talk about it. Sound good?
Yes.
Rock and roll. Okay, first, crypto veterans everywhere are sweating, not because of the price. Actually, it's because of Google. Searches for buy Bitcoin are spiking again, and if you believe in the grandma rule, it's officially time to worry. And in case you weren't aware of it, the grandma rule is actually quite simple. When your grandmother asks you how to buy Bitcoin, the top is it. It's the crypto version of the shoeshine boy giving stock tips before the 1929 crash. And according to Reddit, the OGs are seeing red flags. But here's the problem. The signal might be broken on this one. Because even though Google Trends shows spikes in altcoins and alt season and institutions, not grandmas are moving this market. It's not. It's the institutions. Bitwise says retail isn't the driver of this cycle. Those institutions are. And institutions don't Google how to buy Bitcoin. They deploy capital through treasury desks, OTC desks, and Cayman Island LLCs with 5 lawyers on speed dial. In fact, App Store rankings are now considered more reliable than Google Trends. Retail might be searching, but they're not buying. River estimates that an individual investor sold nearly 247,000 Bitcoin in 2025. That's $23 billion in BTC gone. Meanwhile, businesses, led by Strategy, of course, acquired 157,000 Bitcoin. Strategy alone bought 77% of that. And public companies in total bought 196,207 BTC just this year, more than the 164,000 Bitcoin the network has even produced. So just sit here for a second, let that sink in. The buyers are absorbing more Bitcoin than that which exists. So the Google spike? Maybe it's a false alarm, maybe it's nostalgia, or maybe the old metrics just don't work anymore. This isn't 2017, it's not even 2021. This is Wall Street's bull run. The grandmas are Googling, but the institutions are buying everything before she even clicks the first link. All right, we're bringing in Anton. Anton, we're seeing a big spike in Google searches for buy Bitcoin, but retail really isn't part of it. Are we just seeing curiosity with no follow-through, or is something deeper going on here with retail?
Hank, what I can tell you is that almost no one is using Google anymore. I don't know if you know, but 75% of Google searches are down in the past 12 months. Everyone is using ChatGPT, Grok, or any AI tool to search and explore the market. What I'm seeing is happening right now. We have institutions, and they're not going to go and search how to buy Bitcoin. They're just going and executing. And the type of drivers of this bull run is completely different. But I think this is great for the Bitcoin because think about the new retail that is entering the market. Usually, they're typing how to buy Bitcoin. They're buying some Bitcoin, and then during the first drawdown, they're panicking and they're selling. Moving the price even lower. Right now, you have institutions, and they're not going to sell if the Bitcoin price decreases to 30% next week. They're going to hold, and they're here for the long game. Overall, the Bitcoin market is changing dramatically, and all type of models, historical patterns, even some quantitative models are completely broken. And when someone said to me, but see, the Bitcoin searches on Google are not where they were supposed to be. I'm saying, okay, now we have completely different environment. Bitcoin is not appreciating 100x per cycle. It's appreciating like 10x. And this is still great for everyone because Bitcoin already won. It was recognized from all of the major Wall Street financial institutions. It was recognized from the president of the United States. And no one can complain that Google searches are not spiking. And also, Hank, what I'm seeing is when the Bitcoin price reached 100,000, all of the major media outlets cover this. And even at this point in time, the Bitcoin searches on Google compared to the peak, they were like 60% down. And then what happened? We saw a negative correlation. Like people started searching less and less for Bitcoin while the price reached 120. And this is unprecedented, and it's a very strong sign that retail is completely gone. But this is good for the Bitcoin price because the volatility is also going down, and more people will be now interested to invest some serious amounts in Bitcoin, not just to speculate, because like speculators are bringing very low value to the network.
Yeah, it definitely seems like institutional diamond hands are the primary drivers of this most recent market cycle. But it always begs the question, I've been asking this of a lot of people that have been on the show because I'd love to get different perspectives about it. Why do you think retail is absent for this one? Usually when Bitcoin reaches all-time highs, we see it in the news, legacy media like Google Trends, things like that, but they seem to be watching from the sideline. Do you feel like retail feels as if it's priced out right now? Is there a unit bias where people aren't necessarily understanding that you don't need to buy a whole Bitcoin, right? And it's still going to offer you better returns than most everything that's probably in, the traditional market. So what do you think is the reason retail's standing pat on this one and not joining in on the party?
I think it's going to take more time for retail to fully understand the value of the Bitcoin, because let's think what happened during the last few cycles. In 2011, the first cycle, the price appreciated from approximately $2 to $1,200. And I can remember sitting in my car and thinking, damn, I missed this one. Now Bitcoin is too expensive. And Bitcoin was pretty much everywhere from those early speculators. Then cycle 2, Bitcoin appreciated from approximately the low of $200 to $19,000. And this was 2018 when the masses started learning really about the Bitcoin. This was approximately 100x return for a period of 2 years. And then cycle 3, this was the last cycle where the Bitcoin reached from 3,000, I think during the COVID crash, to 69,000. And this was like 20x return. Still exciting, but not that exciting. And from that moment, we started seeing less and less retail, or at least I started seeing less and less interest from the retail. And again, those are just speculators. Those are people who are aiming to make a fast 100x and then exit. But those people are bringing very, very low value for the Bitcoin ecosystem. But because of the institutions, and now because the Bitcoin has been more and more recognized, I think the real investors are going to understand the value of Bitcoin and buy Bitcoin because of the problems and the utility it's bringing, instead of just buying and planning to sell a few months from now. That's why I think this is super positive for the ecosystem. Like the fact that the retail is not here actually is not bad, because you have now very high quality investors recognizing the Bitcoin value.
Yeah, I totally agree with you. It almost feels like Bitcoin is a victim of its own past successes, because you have all these degen retail traders out there, I've been one of them in the past before, that are looking for these huge alpha plays. And even though, Bitcoin, we are around 120-ish right now, if we're expecting it to go to $1 million in the next 5 or 10 years, that's still close to a 9 or a 10x, which in most traditional investments is incredible. I mean, they usually say, I think it takes, if you put your money in the S&P, it's about 7 years, assuming the S&P gains that normal 7 to 11% we generally see. And that has Bitcoin outperforming that in spades over a similar time period. But I think you're right. Retail degenerates are all looking for that big play, that 1000x. And we're kind of seeing that now a little bit. It feels like the little retail that is in the market might be kind of going into some of those altcoin plays right now. We're seeing Ethereum pick up some steam, Solana, XRP. So I think they're out there, but they're choosing to allocate their money into what they think are higher reward assets right now, even though I think you want to go for the high reward and also the safest bet, which Bitcoin is undoubtedly it right now. There's Bitcoin and there's everything else. And I think we're kind of seeing that play out. And to your point, retail, yes, such a more solid buyer of Bitcoin. They understand the ecosystem. They see where it's going. And I think in the long haul, that's going to be a big boon for Bitcoin's future successes. So I totally agree with you on that. And to my point, retail sold 247,000 BTC just this year, while institutions, especially strategy, of course, absorbed more than the network was even able to produce. So from a banking perspective, Are you seeing that same trend where institutional buyers are crowding out retail because they see where Bitcoin's headed?
So Hank, what we're seeing on the Xapo bank site is the clients, the members we have. Those are OGs. Those people are not the speculators that didn't buy Bitcoin with the plan to sell a few months from now. So actually, our volumes are pretty much stable between buying and selling. Yes, we have some members that are selling, but also a lot of the OG members, because Xapo was established 2013. We have clients that have been with us for the past 12 years. Those people are never going to sell their Bitcoin. In the same time, we have a very strong interest from the institutions, and I think right now the 200,000 Bitcoins that you highlighted, they have been sold mainly from retail, which purchased them a few years ago. Those are not the early OGs. Those are customers that purchased after the 2018 a bull market, and now this was their plan. Like, let's buy, and let's sell a few years from now, because they knew that historically a bull run is taking approximately, like one cycle is taking approximately four years. But yeah, I mean, to your point, I think the OGs are not selling right now. This is mainly like speculators, and I still can say there are very wealthy speculators that are offloading. But Hank, important point, you saw during the weekend, allegedly 80,000 Bitcoins have been transferred. There are a lot of comments if this was a real sell and someone just generated 9.6 billion in profit, which is one of the most profitable trades in the history of planet Earth, or it was just internal tax reasons transfer from one exchange to another. I mean, this still has to be clarified. But if we assume that there is approximately 50% chance that this was OTC deal, which was a real Bitcoin sell, the price of Bitcoin dropped with only $3,000, which is unbelievable. Now think about living in 2022 and someone selling 80,000 Bitcoins. Like, if you remember the Luna, this crazy company, I think they sold approximately 80,000 Bitcoins and they crashed the entire market. We entered the bear market because of them. And now the price is moving with 3,000. I mean, if this is not a strong sign that there is a crazy demand, I don't know what else could be.
Yeah, I mean, it really speaks to the maturation of Bitcoin as a wealth preserving asset. When, to your point, if we had seen that even a couple of years ago, immediate 20% drop, right? But we saw it go down to like 115-ish, and then it clawed its way back in a matter of like 24 to 48 hours, and we're right back to where we started, despite this huge supposed dump of Bitcoin on the open market. So yeah, I mean, I think it really speaks to this next phase of Bitcoin that we are currently seeing and living in right now, and it's very exciting. And according to the story, I think that the part that I thought was interesting is right now, App Store rankings are said to be more accurate signals than Google Trends. Do you guys at Xapo track things like that? And if so, what's your take on where the demand is actually coming from right now? Is it just institutions the whole way? I mean, do you guys track the apps and stuff like that? Maybe you should if you don't. I don't know. Is that something you guys do at Xapo?
So the apps, yes, we are of course tracking the interest, and we see increased interest in downloading Xapo app. But those are mainly like Bitcoiners that already own Bitcoin. Like for new potential Bitcoin holders, I don't see a very strong demand right now, even though it has increased comparing with 1 year ago. But still, I cannot say confidently that we see a huge spike. I think the biggest demand for Bitcoin is not on App Store, or like we cannot use those metrics. What we are seeing right now is on-chain Bitcoin. You know, it's the most unique asset in the world because everything is transparent and can be checked on-chain. And we are seeing some very strong on-chain patterns of users accumulating Bitcoin rather than selling. Yes, there is institutional demand, but don't forget that huge part of the ETFs are considered to be institutional demand. But at the end, those are people like me and you investing through ETF. Because Hank, like a few minutes ago, you mentioned that a few years ago, you can check S&P 500, and then Bitcoin is going to outperform S&P 500. But as an average retail investor, a few years ago, you were not able to have a trusted, centralized partner where you can invest your life savings with them. Because for S&P 500, super simple. You press the button, you go to Fidelity or BlackRock, and then you invest. Now, this is possible with ETFs, with the Bitcoin ETFs. So this is kind of artificial retail also interest. But again, the type of customers that are investing, it's completely different. Those are long-term holders, very wealthy long-term holders. So yeah, different environment, super bullish. Yeah, I'm very excited for the next 4 years.
Yeah. What do you think it's going to take for retail to join in on the party right now? Because it seems like they feel like maybe they're priced out. Does Bitcoin's price need to get so big that even retail can't afford to ignore it right now? Like, are we at that point where we need Bitcoin to be 250, 500K for retail out there that knows of Bitcoin but maybe hasn't been particularly interested in it to be like, oh, wow, this thing is legitimate. I better educate myself because I don't want to miss more than what I already have. Because right now it kind of feels like people think if they can't buy a full Bitcoin, they've missed the boat. But if 0.1 all of a sudden is worth 25 grand, then do you think that is the kind of thing that will bring retail back to the playing field? Or what would you expect to happen in order for retail to seemingly regain their interest in the world's most hard asset?
So Hank, there are only two options for this to happen. First one is the Bitcoin price to skyrocket and actually trigger the retail FOMO, because right now there is institutional FOMO. Institutions are rushing to buy and own Bitcoin. Retail, they're not yet. We know that retail will enter the race if the Bitcoin price appreciates significantly, so they can see opportunity to speculate with the Bitcoin price. As I mentioned, this is not helping really the Bitcoin ecosystem, but definitely can boost the price. Any type of return which is less than 20x, I think the retail is not going to be interested. In simple terms, this is approximately 300,000 per Bitcoin, which can really trigger the retail FOMO. And that's the first option. And then there is a second one, which is much more interested. And now we are talking about the regime change. If people stop recognizing the US dollar as a preferred way, as a safe haven for your assets, or even or potentially gold, and people actually lose the trust in the US dollar, then they need to move their wealth somewhere. And Bitcoin right now is positioned to be the most strategically important asset in the world, which can actually be alternative to the US dollar. Because if you move your wealth to a gold, it's much more complicated to transact, to send your gold internationally. But if you move your wealth to Bitcoin, then you can, with few clicks, even in Xapo Bank, with few clicks, you can pay through Lightning and move your Bitcoin around the world. So it's protecting you from inflation. It's allowing you to move 24/7, and it's still like the most trusted decentralized currency in the world. And this is the other option, which I think can really trigger retail FOMO if something goes wrong with the US dollar. Now, this will also have some other repercussions, which we should not underestimate. But I think if this happens, the Bitcoin price will go way above $1 million, because everyone will look for safe haven.
Yeah, no, I think you're right. I think we're going to need, unfortunately, retail is going to need to see and feel some real pain with their purchasing power decreasing over the next months and years as the US dollar continues to be debased. That they're going to be like, well, there's got to be a better way, because now my groceries that used to cost $50 are $150. So it's unfortunate, because you and I see the writing on the wall. We know this is already happening, but unfortunately everybody kind of has to experience things for themselves sometimes to really have a reason or a catalyst for change and looking at the world differently. So I think you're right. We're going to have to see some big movements probably within government currencies, and people will finally get on board the Bitcoin train if they haven't already. But hey, we'll gladly have them once they decide to hop on board. We take everybody. So, all right, hang tight, Anton. We're going to read this next story. I'm going to bring you back in just a second. So a new Bitcoin price prediction has officially dropped, and no, it doesn't involve laser eyes or Lambos. Unfortunately, I love both of those things. Mitchell Askew, head of research at Blockware, says Bitcoin is headed to $1 million. Heard that before. But he says, don't expect fireworks, because the days of parabolic bull runs and brutal bear markets are over. Instead, he says to get ready for slow, steady institutional gains, which is great if you're a pension fund, but less exciting if you bought in at 69K and are still coping. Askew posted his long-term thesis on X, predicting Bitcoin hits $1 million in the next decade. But forget the 2013 or 2017 style blow-off tops. He says it'll be a series of pumps followed by endless consolidations. So basically, watching paint dry, but hey, with volatility. He argues that this new grinded-out cycle will push out short-term speculators, which in theory leaves more room for people who actually know what the heck they're doing. The key turning point, he says, was the launch of the spot Bitcoin ETFs in early 2024. That institutionalization turned Bitcoin into a less chaotic asset class. Since then, the biggest drawdown has been only around 30% or so. Still volatile, but no longer a financial roller coaster with the brakes cut. Askew believes this new stability favors private miners, especially those using bonus depreciation tax perks to write off hardware. He says Blockware's miners are well positioned to profit from Bitcoin's slow climb. He calls this shift logical. Not bullish or bearish, just what maturity looks like. No more fairy tale pumps, no more Twitter influencers calling tops, and definitely no more 500x dreams from YouTube thumbnails. Askew warns that expecting $500,000 in 5 months is delusional. And trying to time cycle tops based on halvings is a good way to miss the whole ride. So what's the new game plan then? Well, buy, wait, and maybe just take a nap. Wake up in 2035 with a smile or not. Depends on whether you're still holding. So we're bringing back Anton. Anton, Mitchell Askew says the path to $1 million Bitcoin won't be parabolic. It'll be slow and steady. As someone inside the banking side of crypto, does that thesis line up with what you're seeing from clients and capital flows right now?
Hank, I can claim that the Bitcoin will reach 1 million and bet my life. But what I'm seeing, because I'm following all type of quantitative, qualitative forecasts and models. All type of models are based on historical data, and all type of quantitative models got broken in March 2024 when we hit all-time high before the halving, which was unprecedented. Since then, no one really was able to predict the Bitcoin price in short to medium term. All type of different predictions happened here and there, but all of them were wrong. And now there is a different separate type of predictions. People are saying the Bitcoin will go up forever, which actually is not prediction. That's a fact, because that's how the Bitcoin has been designed, and that's how the Bitcoin is operating. Now, am I seeing people expecting diminishing returns on the Bitcoin after each cycle? Yes, and that's a fact, because right now, Hank, Bitcoin market cap is approximately $2.4 trillion. How we can expect the Bitcoin to reach 1 million? Because this means approximately 9x from here. So we need around 20 trillion in capital inflows to reach this price target of $1 million. It's going to take time, and this will also surpass the gold, because currently the gold is approximately 22 trillion market cap. Can Bitcoin beat gold in terms of market cap? 100%. It's a decentralized, much more trusted, and also with a limited supply. So I personally believe this will happen. But it's very hard to say when exactly this is going to be the exact date. In long term, for sure, should we expect the Bitcoin to reach $1 million next year? Unless we have some dramatic order change, I think the chances are approximately 1%. But that's not bad. That's not bad, because at the end, the Bitcoin is getting more and more traction. It's recognized around the world from top financial institutions, from the US government, and more people started seeing the real value which the Bitcoin is bringing. And they're going to start trusting Bitcoin with their life savings, which is the trigger which was missing in the past few cycles, which I think it's extremely bullish.
Yeah, I totally agree with everything you're saying. At this point, it seems like it's just a matter of not if, but when, right? And something people are forgetting about all the time is we're at this unique inflection point in our parents' generation where we're about to experience one of the greatest wealth transfers, if not the greatest in human history, right? And you're going to have, our grandparents, our parents, people that didn't grow up with Bitcoin. So I could understand their initial skepticism to this new digital gold, magic internet money, right? But people forget Bitcoin's been around for 15, 16 years. So in 15, 16 years, you're going to have this whole contingent of the population that has grown up with Bitcoin always being a thing, that they've always known about it. All of a sudden, they're 30. They're receiving wealth from their grandparents, from their parents. Do you think they're going to be more likely to put it in gold, or the best performing asset of all time that has always been around since they were born, right? And I think that once that starts to hit, it will be a slow, gradual climb, but at this point, it kind of feels inevitable to me. Askew in his piece there also claimed that the days of blow-off tops and savage bear markets are likely behind us. Do you think that's wholly realistic, or is crypto always gonna crypto and be a little crazy sometimes? Because that's kind of part of the nature of the game, being able to trade at a moment's notice and transfer. Do you think we're gonna still see some of those big swings, or are those kind of things of the past?
I think this is part of the crypto magic to have those serious price swings. But I think before answering this one, extremely important point of your previous question, it's a fact that some millennials and some of the younger generation, when they receive the wealth transfer, they will jump to Bitcoin, and we started seeing this. I can tell you that there are Xapo Bank customers, that members that are completely refusing to live on the fiat standard. Those people are rejecting the current financial order, and they are aiming to do everything with Bitcoin. A few years ago, this was not possible, because imagine you want to buy for groceries, imagine you want to buy a car, you had to use fiat. Right now, you have financial institutions, right, like Xapo Bank, which are essentially allowing you to live on the Bitcoin standard by allowing you to pay with Bitcoin, transact Bitcoin internationally. Most importantly, allow your Bitcoin to work for you by giving you interest rate, and also borrow against your Bitcoin. So right now, you can get US dollars without selling your Bitcoin, buy a car, while the Bitcoin price is appreciating over 40% every year on average. So why to sell your Bitcoin when you can borrow against it? And then if the merchant is not accepting Bitcoin, but accept cards, because cards are international, you can use your Xapo Bank debit card, pay directly from your Bitcoin balance, and this is going to work. So this wealth transfer, it's matching perfectly with how institutions and financial institutions, most importantly like Xapo, are prepared to serve those customers, which we already started seeing, which is quite crazy for the Bitcoin overall adoption. And then on your previous,
No, that makes a lot of sense. We're seeing it happen in real time, right? PayPal just came out the other day saying they're supporting like 100 different cryptos. You have Jack Dorsey over at Block, who just, I think, opened up payments to like 4 million people using their already established hardware to use Bitcoin. Like, it's happening in real time. And once we start actually using it as a day-to-day currency where I'm paying you back for lunch in Bitcoin and stuff, it's game over. And we're going to see price hikes like we've never seen before. So everyone better get in while we're still hovering around 100K, because I don't think this is going to be for too long of a time. Things are getting wild. Another interesting point in this story was the launch of Bitcoin ETFs in 2024 was described as a bit of a turning point for Bitcoin, as it made BTC feel more like a stable asset class. Has that changed how institutions or even sovereign clients interact with Bitcoin through Xapo at all?
100%. When you have a Bitcoin ETF being approved and actually available to invest in, the interest in Bitcoin skyrocketed. And we also experienced this on Xapo side, simply because we are on the market since 2013, and we were contacted by a lot of institutions, and they were just asking how they can buy Bitcoin, but most importantly, how they can custody their Bitcoin. And this trend is only accelerating. And as I mentioned earlier, we are right now in a FOMO phase of institutions like being trying to buy Bitcoin as soon as possible. And those institutions are not going to sell if the Bitcoin price decrease with 30%. They're not going to panic sell. And this is so strong indicator that the overall Bitcoin ecosystem changed drastically since 2024. And this was a turning point. You correctly said this was a turning point where the Bitcoin right now is recognized internationally, and people trust Bitcoin with their life savings. And those are people who are not going to sell. They're going to keep investing more, and this group of people will only grow because they will attract more and more of their friends, of their family, which is quite good. I would say, at least.
Oh, indeed. Yeah. No, I would agree with that. And if we're really in this new era, right, where bull markets compared to the years past are kind of boring, how do you think that affects the long-term adoption of Bitcoin, especially in emerging markets? People don't see it quite as sexy as it used to. It feels like it's being kind of adopted by a lot of traditional finance, which I think is great for long-term Bitcoin bulls, but clearly it's having an effect on what retail feel or how they feel about Bitcoin. Do you think that's a good thing going forward, these boring bull markets that are a little more predictable and less chaotic, or does that kind of take away some of the sparkle for a lot of retail?
I think I will make probably the most important point since our discussion. Basically, Satoshi envisioned Bitcoin as a pure peer-to-peer electronic cash. Right now, people are very focused on the Bitcoin price. They are a bit greedy, hoping to make good returns. But at the end, Bitcoin is supposed to be the settlement layer for everything. You should be able to move Bitcoin internationally and settle different assets on top of the Bitcoin network. That's how the Bitcoin will become a medium of exchange for everything in the world. And I cannot share a lot, but on Xapo side, we are building heavily. We are envisioning a world where you should be able to transact 24/7 any type of fiat stable coin or even Bitcoin without having any middleman, and everything should be settled on top of Bitcoin. So once emerging markets and people in the emerging markets have this opportunity to transact, let's say, Singaporean dollar or Philippine dollars internationally, 24/7, much faster, literally instant fiat transactions, they're going to experience the real power of Bitcoin. And that's when the Bitcoin adoption will skyrocket, because I think this is a turning point for retail, for the average retail user to understand that Bitcoin is not just asset to speculate, but actually it's a completely different layer of money, which allows you to settle internationally, and you're allowed to settle of any asset, not only fiat or stable coins, but literally every asset can be settled on top of Bitcoin. And right now, think about you are living in Philippines, you want to send the USD internationally. It's going to take you a few days, and the costs are approximately $40 or 35. With Bitcoin, you can send USD internationally. The costs are going to be 0.01 cent, and the transaction will settle internationally 24/7 without bank holidays, without any delays or middle checks, or literally without any delays. So this is the real power of Bitcoin, but we are a bit early. We are still spending a lot of time discussing the price, discussing the adoption. But on Xapo side, I can confidently say that we are building it. We are envisioning this world, and we are actually trying to build the Satoshi vision for Bitcoin to be like peer-to-peer international payment network.
Yeah. And that's one of the many reasons we love you guys at Xapo. You're building the products that we're going to need for this Bitcoin-centric world that we are all very eagerly anticipating in the not too distant future. And for our audience out there, Anton, that might not be familiar with Xapo until today, and they want to learn more about all the incredible things you are doing for our beautiful orange coin, what's the best place for me to send them to get more info?
You can meet us on Twitter or just xapobank.com, and we're going to be very happy to answer any questions. We are also running Twitter talks right now, so just connect. And,
amazing. Well,
hopefully you're going to enjoy.
Everybody should check that out. And I'm always happy to have you on the show, Anton. As always, it's a pleasure. Thank you so much for your time and expertise and wisdom today. We always love having you, and we can't wait to see you again real soon.
Thank you, Hank. It was a pleasure.
Thank you. Pleasure is all mine. All right, let's get back to the bull run because we still got a lot of stories to cover. This next one, well, the U.S. government has filed a civil complaint to seize 20 Bitcoin. That's a value of approximately $2.4 million. The source, a ransomware group called Chaos, which, to be fair, sounds like a fitting supplier for a strategic Bitcoin reserve if I've ever heard of one. The Bitcoin in question was seized by the Dallas FBI back in April. Authorities allege the BTC was the proceeds of unlawful activity tied to ransomware attacks. So naturally, the feds are looking to keep it. And if successful, those 20.2 coins would join the proposed U.S. Strategic Bitcoin Reserve, the one created by executive order from President Donald Trump back in March. Because why buy Bitcoin when you can just confiscate it instead? According to blockchain analytics, the U.S. government holds an estimated 198,000 BTC. Not bad for a government that couldn't pass a crypto bill until this year. But as usual, things aren't so simple. An independent journalist on X filed a Freedom of Information request with the Department of Justice. And the response, well, the U.S. Marshals Service only holds around 29,000 Bitcoin. So either someone's lying or the Bitcoin is hiding in more agencies than anyone initially realized. According to analytics at Arkham, other branches of government, including the DOJ and U.S. Attorney's offices, also seize and hold Bitcoin. Arkham says none of the Bitcoin held by the government has moved in the last 4 months. But some claim some of those wallets include Bitcoin that hasn't officially been forfeited yet, which means the U.S. might be holding coins it doesn't legally own. But hey, finders keepers, right? Right. Now, in any case, whether it's forfeited, seized, delegated, or hypothetically held, one thing is very clear. The U.S. is stacking sats. And now it's not just the federal government. According to Bitcoin laws, at least 30 U.S. states have introduced legislation to create their own Bitcoin reserves. Only 3 have passed anything so far, Arizona, Texas, and New Hampshire. The rest stuck in legislative limbo. So yeah, we're still fighting about it, but if the government keeps seizing Bitcoin like this, we might end up with a national stack built entirely out of hacker spoils and criminal forfeitures. The most American Bitcoin story ever told. All right, let's go to our next story here. What do we got? All right, we got to erase those questions, guys. All right, next up, Donald Trump. Well, he's officially a Bitcoiner now, sort of. In a recent White House press conference, Trump said Bitcoin is great for the country and also, coincidentally, great for him. Let's take a peek at this clip really quick here, guys.
Amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country. So I don't care about investing. You know, I have kids and they invest in different things. They do believe in it. But I'm president, and what I did do there is build an industry that's very important. And, you know, if we didn't have it, China would.
The Don Juan at it again. He also said that Bitcoin performed better than the stock market recently. No mention of how much Bitcoin Don actually holds. But Trump media, well, they own a lot. At the Bitcoin 2025 conference in Las Vegas this year, the Trump sons joined VP J.D. Vance in calling for crypto-friendly regulation. They even predicted Bitcoin hitting 150 to 175K by 2026. Now, Trump media holds about $2 billion in Bitcoin. It's most of their liquid assets, in fact. That gives Trump's personal stake a bump to $2.3 billion. They've also invested $300 million into crypto derivatives tied to ETFs, blockchain stocks, and convertible bonds. And they're planning a utility token linked to True Social. Oh, and his family runs World Liberty Financial, a DeFi firm that made $500 million in a year. Critics say Trump's policies directly benefit his own crypto empire. He says it's all in a trust managed by his sons. So I guess we have nothing to worry about then. In other news, the SEC has delayed its decision on the Truth Social Bitcoin ETF. Again, originally scheduled for August 4th, the decision has now been punted to September 18th. Because apparently reviewing paperwork takes 6 weeks. The ETF is backed by the Trump Media and Technology Group and would list on the New York Stock Exchange ARCA under the SEC's commodity-based trust share framework. Now, if approved, it would be the first crypto ETF directly linked to the business interests of a sitting United States president. So, no pressure. The SEC says the delay is simply to allow more time to evaluate the proposal and any issues raised, which is basically bureaucratic for we're stalling. But hey, in the SEC years, this is actually pretty fast. It took them over a decade to approve a spot Bitcoin ETF the first time. That finally happened back in January of 2024, only 11 years after the first application in 2013. So this is practically a sprint by comparison. The Trump-backed ETF isn't the only one collecting dust. The SEC also delayed decisions on Grayscale's Solana Trust, now pushed back to October 10th. And Canary Capital's proposed Litecoin ETF, which is somehow still a thing. SEC Commissioner Hester Peirce, also known as Crypto Mom, well, she's been trying to set expectations. She recently told Bloomberg that the agency is moving slowly because of ongoing litigation and other considerations. Translation, don't get your hopes up just yet. Meanwhile, Trump's crypto ties continue to raise eyebrows. Back in May, Senators Elizabeth Warren and Jeff Merkley sent a spicy letter to the Office of Government Ethics. It accused a Trump-linked crypto deal involving World Liberty Financial, Binance, and a UAE firm of being a staggering conflict of interests. They warned it could allow Trump and the Witkoff family to profit from foreign corruption. So yeah, the SEC might be dragging its feet for a very good reason. Also worth noting, Trump recently signed the Genius Act into law, giving the U.S. its first clear regulatory framework for stablecoins. And the Trump-appointed head of the FHFA told Fannie Mae and Freddie Mac to start treating unconverted crypto as potentially acceptable mortgage assets. So on one hand, progress. On the other hand, a potential ethics minefield. Either way, the True Social ETF is delayed because, of course, it is. Did you think it wouldn't be? You should have. And Anthony Pompliano, better known as the Pomp, professional Bitcoin hype man and CEO of ProCap, went on CNBC and said something that shouldn't shock anyone at this point. He thinks the U.S. government is going to start buying Bitcoin. According to Pomp, Bitcoin has established itself as the king of the market and is not looking to share the throne with Ethereum, Solana, or any other token that still can't hit a new all-time high. When CNBC host Joe Kernan asked why Ethereum has been getting more inflows lately, Pompliano brushed it off. Let's roll the clip and see what he had to say.
I think that Bitcoin has established itself as the king of the market. I don't think that's going to change anytime soon. And I actually think most of Wall Street's time and attention is on Bitcoin. There are other assets that from time to time start to get some capital flows. But if you look, things like Ethereum, Solana, et cetera, they still haven't set in new all-time highs this summer. And so I think that Bitcoin has kind of broken away. Doesn't mean that some of these other assets maybe in the future can't do that, but Bitcoin definitely continues to dominate the market, both in terms of actual dominance of market cap, but also I think just capital flows and time and attention.
We've been having a lot of people on to talk about stable coins.
Yeah, well, the nice thing about stablecoins is they don't go anywhere other than stay at $1. So, they can grow in market cap size in terms of how many people are using them. But I don't think people really use stablecoins as a comparison to Bitcoin or altcoins where they're looking to try to drive some sort of financial performance.
Now, later in this same interview, when asked what the next major catalyst for Bitcoin's price might be, Pomp, well, he didn't hesitate. He said the U.S. government announcing it's buying Bitcoin for a strategic Bitcoin reserve would be the main dish. Not dessert, not an appetizer, the main event. Because nothing says bullish quite like Uncle Sam stacking sats. He also listed two other triggers that could push the price higher. First, the remaining Wall Street firms still on the fence will finally capitulate and buy in. Second, all those cautiously optimistic investors. they'll turn into optimists, which in Bitcoin terms mean they go from tweeting, watch closely, to rage buying at 150K. So there you have it. According to Pomp, Bitcoin is king. Stablecoins are boring. Ethereum is trying, and the US government will eventually say, we are buying Bitcoin. And that'll be the real fireworks. Let's just hope they don't buy the top. All right, we're taking a break. When we're back, we got more bull run and our guest of the day, Jody Flournoy. A lot more coming up on the Blockchain Report. Stay tuned. You won't want to miss it.
Security matters. Xapo Bank. The only way to bank your Bitcoin. Apply now at xapobank.com.